This is Alan Bush with ADMIS with the daily financial forecast for Thursday, November 12th. In the stock index futures, we are seeing prices under pressure, and it looks like the dominant influence over the last couple of weeks has been prospects of a rate increase from the Fed when they meet on December 16th. But it's starting to look like this is fully priced in, or mostly priced in, with the pressure that we have seen. Also, there's more and more talk that if the Fed raises rates at this December meeting, that they will try to do it in somewhat of a dovish way, which does not actually appear to be a contradiction of terms. I think their feeling and their indication will be that if they do raise, that they do not want traders and analysts to believe that it will be followed by rate increases at every following meeting, which is our thought as well, that when they do raise rates, if they raise rates, there will be quite a period of time, a long period of time between then and the next rate increase, if they can raise rates at all. And I'm still not convinced that there is a good enough case for a rate increase, especially when the rest of the world is, for the most part, in accommodation mode. So as far as prices, I think stock index futures will probably hold up here as we get close to support areas. I think we can see sideways to higher price trend in advance of the December meeting. And after the meeting is out of the way, whether they raise rates or not, I think we'll see stock indices working higher into next year. Now, moving over to the currencies, strangely enough, even though Mario Draghi today indicated that more economic stimulus is likely in December, the euro currency is holding up well and is higher, which it should not be with this kind of a statement. And the dollar index, which should have been very strong on this news, is actually lower on the day. So we're seeing the dollar ignoring some bullish news and the euro currency ignoring bearish news for the euro. This is an indication that these central bank moves in December, with the Fed likely to raise rates, the ECB likely to have more accommodation, are probably, for the most part, priced into the current exchange rates between the dollar and the euro currency. So there may not be that much left to the upside in the dollar, and there may not be that much more to the downside in the euro currency. Also, we are seeing good gains in the Australian dollar after employment numbers in Australia coming in substantially better than expected. In fact, we have seen the best numbers in the employment area there in the last couple of years in Australia. Now, moving over to the interest rate futures markets, seeing the bonds a little bit higher, which is mainly a function of stock indices under some pressure today and lower energy prices. But it also is starting to look like this weakness we've seen in the interest rate markets is, for the most part, priced in as far as the probability of a rate increase at the end of the year. So there may not be much more to the downside in the bond market. However, I think I would stand aside for right now and instead concentrate on the stock index futures, and I would be buying any additional breaks should be used as a buying opportunity for the indices. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.